Hey everyone, welcome back to the Stock Bro. On April 2nd, 2025, Donald Trump shook the world with a massive trade move. Reciprocal tariffs aimed at rewriting how America does business. We're talking a 10% tax on every import, 54% on China, and a bold plan to bring manufacturing back home. But here's the kicker. Unemployment's already at 3.7%. Who's going to fill these factory jobs? Could this actually make the US economy stronger? And here's a wild idea. Could America turn into a powerhouse like Switzerland, isolated, self-reliant, but thriving? Today we're unpacking it all. What these tariffs mean, their risks, their rewards, and if the US can pull off a Swiss-style miracle. This is a big one, so grab a snack, hit that like button, subscribe if you haven't, and let's dive right in. So let's break it down. On April 2nd, Trump stepped up to the mic and called it Liberation Day for American workers. He rolled out these reciprocal tariffs. Starting April 5th, every single import into the US gets slapped with a 10% tariff. No exceptions, unless you're on a short exempt list. Then by April 9th, it ramps up. Countries with big trade surpluses get hit harder. China, 54% total, building on existing tariffs. The EU, 20%. Japan's at 24%. South Korea, 25%. Taiwan, 32%. Even Canada and Mexico face 25% on non-USMCA goods, with energy at 10%. So how is he doing this? Through something called the International Emergency Economic Powers Act, IEEPA. Trump is saying the $1.1 trillion trade deficit, think $295 billion with China alone, is a national emergency. His fix? Match what other countries charge us. If they tax our cars or soybeans, we tax their electronics or steel right back. It's like a trade, tit for tat. Now, there are some exemptions. Steel and aluminum, already tariffed, plus pharmaceuticals, semiconductors, copper, lumber, and some energy stuff we don't make here. But everything else? Get ready to pay more. Trump's team says they calculated these rates by looking at trade deficits, dividing by a country's exports to us and halving it for a kind of reciprocal rate. Critics call it chaotic. Why is tiny hard island on the list? But the goal's clear, shrink that deficit and bring jobs home. The problem is, the world's not thrilled. The EU is prepping $18 billion in counter tariffs on the US. China's promising to protect its interests. Canada's muttering about energy and fentanyl talks. This could spiral into a full-on trade war. So yeah, it's a gamble. Let's see how it plays out. Okay, let's talk about what this means for us, starting with your wallet. These tariffs are going to jack up prices. Experts are saying 2.3% inflation, maybe more in tech or autos. That $1,000 phone could be $1,030 soon. Cars, clothes, appliances, all pricier. Goldman Sachs ran the numbers and warned if retaliation kicks in hard, we could see a 4% GDP drop, pushing us toward a 2025 recession. Long term, the tax foundation says a 20% universal tariff plus 50% on China could shave 1.3% off GDP, even before other countries hit back. But it's not all bad. Domestic industries might get a boost. Think steel, machinery, maybe textiles. Back in 2018, Trump's steel tariffs added about 28,000 jobs in that sector. Scale that up and we could see 50,000 to 150,000 new manufacturing gigs over a few years. Places like Ohio, Michigan, Pennsylvania, the Rust Belt could see factories humming again. Here's the big question though, who's going to work there? Unemployment's at 3.7%. We're basically at full employment. There's no army of idle workers waiting to punch in. So where do they come from? Option 1, people switch jobs. Retail's got 15 million workers at $21 an hour. Manufacturing pays 31. Tempting, right? But it's not that simple. Factory work needs skills, and retraining takes months, even years. Plus, not everyone wants to ditch flexible gigs for a 9-to-5 job. Option 2, automation. US manufacturing output's up since 2000, but jobs are down from 17 million to 13 million. Robots did that. Tariffs could speed this up, meaning fewer workers needed. Option 3, immigrants. Construction and agriculture already lean on undocumented labor. Factories might too, but Trump's border wall obsession makes that politically dicey. There's also the labor force participation angle. 62.5% of working-age folks are in the game. Could we pull in retirees or discouraged workers? Maybe a few 100,000, especially in factory towns. But remote works change the vibe. People aren't rushing to move to Indiana. Bottom line, we're short on bodies. Any manufacturing bump will be slow, automated, or stuck waiting for workers that just aren't there. What do you think? Can you solve this labor puzzle? Now, let's flip it. What could these tariffs actually do for us? They're not just chaos. There's potential here. First up, money. Early estimates say they could rake in $3.8 trillion over 10 years, $3.1 trillion after economic drag. That's cash Trump could use for tax cuts, like extending the 2017 breaks or boosting child credits. More money in your pockets. Sounds nice, right? But inflation might eat that up, so it's a wash unless prices stabilize. Second, leverage. Trump's playing hardball. He's betting countries like China, facing 54% tariffs, will blink first. Imagine China buying $100 billion more in US soybeans or cutting their 67% auto tariffs. The EU might drop its 20% VAT equivalent on our goods. Canada and Mexico could cave on fentanyl or migration to keep USMCA perks. If he pulls this off, exports could jump $50 to $100 billion a year. It worked-ish before, think USMCA replacing NAFTA, but he's burning bridges too, like ditching TPP. Third, industry wins. Sectors where we've got capacity, machinery, chemicals, textiles could see 5 to 10% output spikes. Look at North Carolina's textile towns or Pennsylvania's steel mills. Small revivals could mean jobs and pride. Fourth, resilience. Post-COVID, we saw how shaky global supply chains are. Chip shortages, PPE chaos. A 2025 RAND study says a 10% tariff could shift 15% of critical production home by 2030, saving $50 billion in crisis costs. And don't sleep on the politics. Trump's base eats this up. Made in America hits the heartland hard. Even if it's just 1,000 jobs in Michigan, it's a win for his 2026 midterms push. Here's the flip side. Retaliation could gut exports. $27 billion in soybeans alone are at risk. Higher costs might kill small businesses. The 2018 tariffs cost $195,000 per job created. Scale that and we're talking $200 billion for 100,000 jobs. Worth it? You tell me, drop your take in the comments. Okay, here's the big crazy idea. Could these tariffs turn the US into a Switzerland? Isolated but thriving? Switzerland's this small neutral gem. 8.7 million people, $885 billion GDP. They've got banking giants like UBS, pharma like Roche, and those fancy watches. They export 65% of GDP, mostly to Europe, with low tariffs and smart trade deals. Could the US pull that off? Picture this. Tariffs cut trade from 15% of GDP to 8 to 10%. Exports and imports drop $2 trillion combined, which look like the 1930s pre-globalization. Trump's already pushing less foreign meddling, fewer trade pacts, arm-twisting allies like Canada. We're energy independent since 2019. And food? We export $180 billion, import $130 billion, so we could feed ourselves just fine. Manufacturing might shift back 10 to 15% by 2030, making us a fortress economy. Could it work? Maybe. The dollar's reserve status, 60% of global reserves, could bankroll it, like the Swiss franc. Tax revenue from tariffs could fund growth, would grow slower 1.5 to 2% versus 2.5%, but be stabler, less tied to China's whims. Niche industries could grow, think energy tech or agribusiness. But here's why it's a stretch. Switzerland's tiny. 8.7 million people versus our 340 million. Their per capita GDP is 102,000. Ours is 85,000. They are high skill, 50% tertiary educated, $70 an hour productivity, and we're at $45 an hour. Our workforce isn't factory ready. Trade is their lifeline, ours is a bonus. Retaliation could cost us $50 to $100 billion in exports, hitting farmers and tech. And, most importantly, the US is the world's backbone. Dollar, military, markets. Isolation risks that. The 1930s smooth Harley tariffs tanked trade and deepened the depression. History is not kind here. Switzerland built this over centuries. We'd be speedrunning it with a $28 trillion economy. Inflation might hit 3 to 4%. GDP could drop 1 to 4% long term. We'd be a fortress, sure. But richer? Maybe not. What's your call? Could we pull off a Swiss trade miracle, or is this a pipe dream? All in all, Trump's tariffs are a wild ride. They could spark jobs, fund tax cuts, and maybe make us tougher. But with no spare workers and the trade war looming, it's a tightrope. A Swiss-style US? It's a cool thought. Less global, more self-made, but we're too big, too messy to nail it without pain. Growth might be slow, prices might climb, and the world might push back. What do you think? Can Trump make this work? Or are we staring down trouble? Drop your hot takes below. If you loved this deep dive, make sure to watch last week's video on screen right now. Hit that subscribe button, it really helps a lot. Thanks for hanging out, see you in the next video. And as always, happy investing.